name is Rajesh Minocha and I'm the founder of Financial Radiance. Welcome to my YouTube channel on personal finance, wherein I simplify jargons associated to personal finance, one topic at a time. I have been speaking about the need of documentation and why should documentation be done and what is it that we should have in these documents. Today I will be speaking about what are the financial statements we need to have. I would say it's very similar to what we have in our corporate life. We need to maintain a balance sheet for ourselves, and we also need to maintain a cash flow statement. Now, what is it that the balance sheet needs to contain? It needs to contain all our assets, which are by way of investments, or it could be the money lying in the saving bank or in the fixed deposits, or anything else associated like the real estate or any other assets which we have. So we actually group them all together into one category called assets. Then we have one section related to liabilities, wherein we look at all the money which we owe to people. For example, the home loan, the personal loan, the vehicle loan, etc. Now the difference between the assets and the liability is our net worth. And that's the number which we should track on a regular basis. That number should grow in line with our goals. What is also important is the cash net worth, wherein we remove the asset associated with the property which we are using for a self-consumption, because it's not an investment, right? So similarly, we should track our cash flow, wherein we mention all our income related data together, all the salaries or the business income or any rental income which we get or any investment income. So we classify all that together under the broad header of income. Then we mention all the expenses below, wherein we categorize it to the discretionary expenses, which are the non-mandatory expenses, and the non-discretionary expenses. So we have all of them listed together, whether they are monthly expenses or they are annual expenses. So basically all are mentioned together. And then we calculate the cash flow, which is essentially the income minus the expenses. Ideally, the cash flow needs to be positive. If not, then we seriously need to evaluate ourselves to see how we can cut down our expenses or we can increase our income, because it's the positive cash flow which we can utilize towards investments for our future goals. So that way, as you have noticed, we have quantified all the numbers, and that is something which we should track on a regular basis. You may have been very overwhelmed with all this information, but there is some great news. I also have a template which is available for a free download on my website. All the information is given below in the links, so you may want to have a look at that. And if interested, you may want to download that template. It's going to be very useful for you to track this information on a regular basis. If you have any questions, comments, etc., please feel free to mention them in the comment section below. Or if you want me to talk about any particular topic as such, please mention that too. I would want to make this channel as much interactive as possible. So thanks a lot for listening to me. And yes, do subscribe to my channel. That way you will be the first one to get to know about my future videos. Thanks very much for your time.